Threats of recession, ongoing inflation, upcoming presidential elections, multiple wars around the world, artificial intelligence that is going to wipe up jobs in the Silicon Valley. How will all this affect the housing market and the home prices? Are there going to be homes to buy? Let's examine the real estate market and what to expect in 2024. The story of the 2024 market starts back in 2023. How was it last year? The entire real estate market was defined by the wild ride of the interest rates. Interest rates were fluctuating dramatically and rose to a 23-year high in the fall of 2023. According to Freddie Mac, the lowest interest rate recorded in 2023 was 6.09%, and the highest was 7.79 at the end of October, with a lot of fluctuations in between. The important thing is that in the last quarter of 2023, we witnessed rates declining from the peak to 6.61%, a 1.2% drop. In dollar terms, it is a saving of more than $800 a month on a $1 million mortgage. And this is a starting point for 2024. The already high interest rates and their continuous growth through most of 2023 brought down buyers' confidence. Buyers' memories of low 3% rates in 2020 were still too fresh, and some decided to wait for interest rates to drop. Others were simply unable to afford high interest rate mortgages and got priced out of the market. Overall, a lot of home buyers decided to wait and put on hold their plans for a new home. Many industry analysts predicted that this reduced pool of buyers on the market will lead to an increase of the number of homes available for sale and consequent drop of the home prices. But these economists did not factor in the sellers' behavior. For the homeowners, 3% interest rates is still a reality. This is the rate they are paying on their existing mortgages. But some of these homeowners are dreaming of bigger homes, more spacious yards, or are in need of downsizing. The prospect of selling the house that was financed at 3% interest rate or even lower and getting a mortgage on a new home at 6 or 7% put them into waiting mode till the rates go down. They're interest rate locked in their homes. This situation brought us the lowest inventory of homes on the market in the 21st century. The interesting thing is that even when people decided to move, many did not sell their existing homes and rented them instead. They became accidental landlords because rent covers their mortgage payments, and it is easy for them to keep the old home and take advantage of its market value appreciation. This reduced the number of homes available for buyers even further. Just to put it into perspective, in Santa Clara and San Mateo counties combined, 18,000 homes were listed for sale in 2023, and the year earlier, in 2022, 23,500 homes were available for purchase. And in 2021, 28,000 properties came to the market. So we're seeing an unprecedentedly low number of homes available for sale combined with reduced housing affordability. As a result, the buyers are not buying and the sellers are not selling. We can say that the real estate market in 2023 was completely frozen. Because of the low inventory, the number of sales fell to the lowest level since the housing crisis and the Great Recession. In 2023, roughly 14,000 homes changed hands. Compare it with 17,000 homes that were sold back in 2008, the previous low record. But then we were dealing with a completely different market with a huge supply of houses and prices in a free fall. Is it possible that the availability of homes on the market in 2024 will get even worse? My answer is no, and I would like to explain why. Availability of homes for sale is at its lowest. Look at the graph that shows the number of homes sold annually. The number of homes changing hands reflects so-called life cycle sales combined with the discretionary sales. The life cycle home sales are those that are triggered by events like need for a bigger home for a growing family, need to sell because of a divorce, or move to a retirement community, or a relocation for a new job out of state. In these cases, people are forced to sell or buy regardless of the economic situation. If the market comprises mostly of these kinds of sales, it is the slowest pace of sales possible. So it is hard to imagine that the number of homes for sale in 2024 will go down even further from the numbers we've experienced in 2023. At the same time, the demand for homes is growing. It is obvious that after the Feds dramatically increased short-term interest rates in order to fight the inflation, the discretionary home sales went significantly down, creating a pent-up demand. People who wanted to upgrade their living accommodations, I mean get a bigger backyard for gardening, or buy a home with remodeled bathrooms, or downsize after kids graduated and went off to college, were waiting for a more favorable housing market and lending environment, for more homes coming to the market and better interest rates. But they can't wait forever. At some point, they have to move regardless of the economic conditions. One might argue that the high interest rates will lead to lower home prices, right? Maybe in theory, but in practice, here in the Bay Area, prices remained almost unchanged compared to 2022 and even continued to grow despite all odds. The reason for that was the minuscule inventory. With so few homes on the market, there were enough buyers to snatch all available homes. Those who can afford it were willing to pay higher prices despite the highest interest rates in 23 years. They considered finding the right home in the Bay Area a win for their families. They secured a place to live in, to call home, and they will be watching the mortgage rates to refinance when better rates become available. Everyone agrees that today's growing home prices are hanging on the low inventory. Basically, this is where we are now, the demand overpacing the supply of available homes. And high interest rates and uncertain economy preclude many buyers and sellers from realizing their plans and stops them from moving forward. Is the situation going to change in 2024? What to expect in 2024? The 2024 real estate market, both inventory and prices, will still be defined by mortgage rates and affordability. Mortgage rates are poised to decrease further from the highs of 2023, following indications from the Federal Reserve policymakers at their year-end meeting. They anticipate 3 cuts to short-term rates by the end of this year, 0.25% each. Mortgage rates have already come down in anticipation of Fed rate cuts. As I mentioned before, the mortgage rate decreased by almost 1.2% since its peak at the end of October of last year. The question now is whether the Fed will need to make more drastic cuts and start bringing rates down sooner than later. The timing of the cutting of the existing rates has become a point of discussion. Investors in the bond market, which predominantly funds the mortgages, are expecting the Feds to initiate rate cuts as early as March. Futures markets are currently indicating odds of 2 or more rate cuts by May 1st. But JP Morgan's forecaster Ginger Chambliss doesn't expect the Federal Reserve to begin cutting interest rates until June. And consumers are changing their outlook too. A record-breaking number of respondents surveyed by Fannie Mae are anticipating a sustained decrease in mortgage rates over the next 12 months. The good news is that this remarkable change in consumer expectations has the potential to liberate many homeowners from preserving their current mortgages and could result in a rise in the supply of homes for sale in 2024. Fannie Mae Deputy Chief Economist Mark Pollum cautioned that even if mortgage rates keep falling, economists at Fannie Mae continue to believe that home sales will post only modest gains in 2024, with elevated home prices continuing to pose affordability challenges for first-time home buyers and others. Here in the Bay Area, we also expect a modest increase in the number of homes available for sale. The Bay Area is facing additional challenges because of the limited availability of land for new construction. We can't expect any relief from the housing shortage from the increase in the housing stock. Whole peninsula is built up from the tip of San Francisco all the way down to South San Jose. Development opportunities are limited by the bay on one side, by the mountains on the other, and by cities stacked one against another with no space in between. With the mortgage interest rates expected to decline and the supply of homes for sale expected to stay constrained, home prices are expected to remain stable or to grow at a moderate pace. After all, the economic outlook is very uncertain. Some economists predict a recession in 2024, and others are forecasting an economic soft landing and avoiding the recession altogether. Other sources of instability are ongoing wars in many parts of the world, disruptions of the supply chains by hostile players, and don't forget about the 2024 elections. This is Michael Talis with the Talis team. If you are thinking about buying or selling a home within a year or even two, let's get together on the phone or on Zoom to review what you need to do to enter the market and to complete a successful purchase or sale. My contact information is in the description of this video. Keep in mind that I'm available in the evenings and on weekends at the times when you are off work. I am looking forward to connecting with you. Till next time.